The whole world of investing can seem super complex, right? But what if I told you it's really just a tool to help you reach your goals? Well, in the next few minutes, we're going to demystify the whole thing and give you a simple guide to get you started on your financial journey. Let's dive in.
Think of this whole explainer as your map. I mean, every journey needs one, and trying to navigate the world of finance is absolutely no different. So we're going to follow a pretty clear path here, starting with the big picture before we explore some of the specific trails you can take.
So, first things first, why are we even on this journey? It's because investing isn't just about numbers blinking on a screen. It's about funding your life. Maybe you're thinking about retirement, buying a house, or your kids' education. Whatever it is, just think of investing as the vehicle that helps get you there.
It's helpful to think about your financial life as a kind of cycle. Your goals, and just as importantly, how much risk you're willing to take on, well, they change a lot as you move through different stages of life, from trying to build your wealth to just preserving it.
And this cycle, it pretty much breaks down into three key phases. First, in your 20s to 40s, you've got the accumulation phase. You're all about long-term growth. Then you move into consolidation in your 40s and 50s, where you start to pull back on the risk a little. And finally, there's the spending and gifting phase, which is all about making sure what you've built is safe.
So pretty much every investment journey you take is going to come to this one fundamental fork in the road. And honestly, when you boil it all down, every single investment you make is one of two things. You're either loaning your money out to someone, or you're buying a piece of something. That's it.
Okay, so on one hand, as a lender, you've got a contract. It's pretty straightforward. You expect to get your money back plus some interest. But on the other hand, as an owner, there are no guarantees like that. Your potential for a big reward or a big loss is tied directly to how well the thing you own actually does.
So here's a really simple, but kind of brilliant way to think about this. A bond is basically just an IOU. It's from a government or a big company, and they're borrowing your money and making a promise to pay you back with interest. Simple as that.
And then, on the flip side, you've got an equity security, or what we all call a stock. That's not an IOU, it's more like an I own you. You're not just a lender anymore, you're a part owner of the business. You get to share in its future. That is a huge shift in thinking, from being a loaner to being an owner.
Okay, let's head back to our map for a second and explore that first path we talked about, the world of being a lender. This is where we find things like bonds, and these are often seen as the bedrock of a solid investment portfolio.
So, a bond, what is it exactly? Well, it's a type of fixed income investment. It's a pretty simple deal, really. You give a company or a government your money, they pay you regular interest payments over a set amount of time, and then at the very end, they give you your original investment, the principal, back.
And bonds aren't all the same. They come in a few different flavors. Governments issue them to pay for things, cities issue them to build schools and roads, and big companies issue them to raise money to grow. Each one has a different purpose and, of course, a different level of risk.
So what's the catch? What's the main risk here? Well, for a lender, the biggest worry is actually pretty simple. What if the person or company or government that you loaned money to can't pay you back? It's called default risk. And if the entity you loaned to goes totally bankrupt, you could lose everything.
All right, time to head back to that fork in the road. Let's take that other path now, the path of ownership. This is the world of stocks or equities, and this is where the potential rewards can be much, much higher. But you guessed it, so can the risks. That's because as an owner, if the company goes under, the lenders get paid back first. You're last in line.
Okay, so a stock, or an equity security if you want to be formal, what is it really? It's literally a tiny piece of ownership in a company. When you buy a stock, you become a part owner. And as that company grows and hopefully gets more profitable, the value of your tiny share can grow right along with it.
So how do you actually make money from stocks? Well, it usually happens in two main ways. First, a company might decide to share its profits directly with you through payments we call dividends. Second, if the company does really well, other investors will want to buy its stock too, and that demand drives up the price. We call that appreciation.
Okay, so this brings us to probably the most fundamental concept in all of investing, the trade-off between risk and return. Now, this chart shows us some historical data, and you can see right away that stocks have had much higher average returns than bonds. But look at that last column, standard deviation. You can just think of that as a wobble factor. It measures how much the investment's value has bounced up and down. The higher that number, the bumpier the ride has been historically.
And if that table was a bit much, this chart makes the whole thing crystal clear. See how the higher the bar for potential return, the greater the historical volatility or wobble? There is just no free lunch in investing. If you want the chance for higher rewards, you have to be willing to accept more risk.
But of course, our map doesn't just have two main roads. There are some, let's call them advanced trails. And these are really for the more experienced travelers out there who fully, and I mean fully, understand the risks they're taking on. We're talking about stuff like derivatives, which are really complex financial tools, and of course, you've heard of crypto assets like Bitcoin. These are very different beasts, with their own unique characteristics, and yeah, some pretty significant risks. We are definitely going to save a deep dive on those for another time. So, with all these different paths and trails, what does the whole world of investing actually look like? Well, this chart gives us a great snapshot of the entire global market. You can see that stocks, or equity, make up the biggest slice by far. But bonds, both from governments and corporations, which includes that investment grade, or IG credit, are also massive pieces of the puzzle. It all fits together to create the landscape we invest in.
So let's just zoom out and recap our journey, right? At its heart, investing really just boils down to that choice between loaning your money or owning a piece of an asset. Every path has its own balance of risk and potential reward, and all of them play a part in this fast, interconnected global financial system.
So there you have it. We've laid out the map, we've looked at why you'd even start this journey, we've explored that core choice between loaning versus owning, and we've talked about that fundamental trade-off between risk and reward. So now, the only question left, and it's really the most important one, is where will your journey begin?